What's going on, guys? I want to give you guys a quick example of what a bear flag looks like. A lot of newer traders, um, look at extended moves to the long side or to the short side, then see a bounce and start to get very, very excited. Anytime we have an extended move, for example, Amazon is a stock that we're looking at. We had a big run up off the open. There was money to be made on the long side off the open. We did put in a high of around $129 and we started to pull back very, very aggressively all the way to a price point of $124. What I kind of want to point out to you guys right now is if we look at this extended leg down from 129 to 124, this is a big leg down here, pretty much giving back all of the gains from the open, came down and literally tagged the low wicks of the first hour's lows. Okay, so keep that in mind. That's this 124 line here. It's going to act as support until it's broken. Now that we have a little bit of a uptrend here, this is where a lot of traders start to want to go long and or start to bounce. You end up getting chopped around, this thing can fail, and then you end up losing money. Here's where I would want to go long on Amazon. Is it going to work? I don't know. Could it work? Maybe. Time will tell. But I'm not looking to go long just because I'm looking at, 30, 40 minutes worth of small green candles here. Volume is getting lower. We are in the New York Wall Street lunch hour here. We are getting a little bit of a bounce. Even if we reclaim the 20 SMA here on the 5-minute time frame, it's still not an area I want to get long. This does not break the downtrend. As soon as Amazon starts to lose 124.78, could come back down here and test 124 and break down lower. So extended leg down, nice bounce here off the lows, held the low of day here. Could this come back? Yes. Do I want to jump in now? No. I am not looking to even think about going long on Amazon until we get back over 127.28. Anytime a stock has an extended leg down and it starts a little bit of a reversal, if it cannot clear out at least 50% of the move, and if 50% of the move would be somewhere in here. So until we get back over 127, it has not reclaimed 20% or 50% of the downwards move. This is nothing more than a bear flag. As soon as this breaks, it will come back down. Now, when we get back over 127.28 is an area where I'd look to get long. 127.28 has room to 129, and anything over 129 has more room to stretch. But until we get over 127.28, I'm just going to let this stock continue to do whatever it wants to do. This stock can chop around, it can go sideways, it can get over 126, it can come back down to 124. I want to do nothing until this flag breaks to the downside. When this flag breaks to the downside, I want to be short. When it loses the low of day, I want to be short. When it breaks 126, I want to do nothing. When it's chopping around between 125 and 127, I want to do nothing. This is where you need to be patient, allow price action to show you what's going to happen next, and allow the charts to tell you when we are going to go higher and when we are going to go lower. So many traders are trying to anticipate a move. Oh, I think that, this is the selling, we held the lows. I think we're going up. The market doesn't care what you think. The market doesn't care if you think we're going higher. The market doesn't care if I think it's going to go lower. The market doesn't care if we call this a bear flag or not. Whether this breaks 127.28 is going to tell us that the trend is broken, or when this loses the 9 EMA and loses 124.80 and loses 124 is going to tell us when the stock is going lower. Do not get caught chasing on a bear flag when we have not reclaimed at least 50% of the downwards move. We've given back all of the gains from the open. Think about that. Do you want to get long here? It's very, very risky. I hope that makes sense. Just trying to give you guys my thoughts on how I analyze charts. Everyone analyzes charts differently. There are people who are going to take the double bottom here, get in long here. Maybe you guys have sold and taken some profits here. Great trade. But for me, the way I trade, I just let this go. I have to let it go. There's no money there for me. The amount of mental equity and stress that this trade is going to put me through is going to drive me insane. Because if I get long here over the 20 SMA and I get rejected at 126 or 126.50 and it rolls back on me and I lose money, I'll be very, very upset. Because I knew that technically we have not changed the downtrend. Okay, we had an uptrend, We have a downtrend. This is a dead cat bounce. This is a bear flag, whatever you want to call it. The actual change in trend doesn't happen until we get over 127.28. And even that can still get rejected anywhere between that price and 129. I just feel more confident trying to scalp this zone than I do this zone or this zone. I hope that makes sense.